I'm essentially here to talk to you guys about what meets our impact bar and how we sort of tackle that question, particularly as it relates to the fund investing work that we do. To give you guys a little sneak preview into the rest of our presentation, essentially, when we look at whether or not a fund meets our impact bar, we're looking at two things. We're looking at the intentionality behind the managers, and we're looking at their portfolio companies, right? And so in the spirit of that, to introduce myself, I figured I would just share my intentionality and sort of why I'm doing this, right? So my professional background is I'm an ex-investment banker who woke up one day and realized the mistakes that he made in his professional career. And he went to philanthropy and then found a happy home in impact investing, right? But for me, the thing that put things in perspective is I was originally from Mexico, and I lived all my life trying to justify my existence, but I realized I was justifying my existence for my parents, not for myself. And it wasn't until, my mom, who had a really bad death scare, that I realized that, I should live my life for me. And in order to live my life for me, it's really to be happy, right? And to me, that's my overall objective and the thing that I'm trying to do. But there's many ways to define what makes you happy. And for me, it really sort of comes, my favorite definition is that happiness is when you have integrity between what you say, what you do, and what you think, right? And so out of those three legs of the stool, impact investing is my way of sort of achieving that. But let me now introduce my firm, Impact Engine, because that will give you a little bit of context as to where I'm coming from. So in a one-sentence summary, Impact Engine invests, and we're doing it in the areas of economic opportunity, environmental sustainability, and health equity. We're a firm based out of Chicago, and we were actually originally founded in 2012 as a social entrepreneurship accelerator, but every couple of years we've been adding new capabilities to the firm, and today we're investing out of a venture capital fund, making seed and Series A software investments, a private equity fund making fund and company investments at the growth and buyout stages, and our first separately managed account making just fund investments in venture, growth, and buyout. And it's really from this unique seed of having exposure to different themes, different geographies, different asset classes that we sort of bring in a cohesive set of impact investing. So whenever I try to think about how you even begin to answer this question as to what meets your impact definition, I come to it from a place of humility, right? Now, I'm not going to make you do the silly interactive exercise. We're close to the end here. But if you ask yourself, is Google the most impactful company in the world? It's a difficult question to answer, right? On the one hand, they took all of the world's information, they organized it, they made it useful, they made it accessible. But there's something really dissatisfying from hearing that a big tech overlord is the most impactful company in the world, right? Who maybe is not doing the right things from an environmental footprint, from a data privacy, from a responsible user standpoint, right? But I think the important thing here is to sort of come from it from a place of humility and know that at the end of the day, you're asking a flawed question. And we're here to discuss about what impact means to Impact Engine. And so the first way we want to begin to address that question is with our fancy framework called the 5 Ps, right? And it's essentially a recognition that there's many different ways of achieving impact in the world, but that we're going to try to focus on one specific one, the product-based impact. And we're focusing on this one because we believe it's how you mitigate the most potential conflicts of interest between growing the financial return of something and the impact return of something, right? If you essentially focus your underwriting of sort of impact in the main product or service of that company, then you're only worried about the financial success of that company. Because as long as the financial business grows, then the impact is going to grow alongside it, because the main value proposition, the main thing of that business is tied to the impact, right? But there's other ways of having impact. You could sort of invest in underrepresented places, underrepresented people. You could maybe be a bar, but you are employee-owned, and you source very responsibly, and you market yourself very well, right? And that's not to say that that's not impact. That's just not the impact that Impact Engine is sort of set up to do us in diligence. So essentially, when we started thinking about whether or not we can measure or define whether a fund is having impact, we went to our roots of how we started, which is essentially as impact investors in companies. And so this is essentially our impact philosophy whenever we're investing into a company, specifically focused on the main product or service of a company. And for that company, before investing, we have to have an impact thesis of it. And in that thesis, we say, hey, this is a big societal problem, the area that this company is addressing. This solution is making a big dent in this problem in this way. And this is how we're going to measure progress against it, right? But it's important that when you're measuring progress against whatever this company is doing, that you think about the impact in a couple of different dimensions. So you really sort of capture the whole entity of it. The first is think about the scale, right? So if you're a rooftop residential company, this is all about how many rooftop solar systems you're installed, how many people you're reaching. The effectiveness is all about why is this even better for the world, right? How does this compare to how a typical house powers itself? How much greener is this? How much more effective is it, et cetera? And then accessibility is actually one area that doesn't get talked about, but I think it's actually where most of our investments die, right? Because a lot of the times in the impact community, specifically in the market rate impact community, people are focused on sort of paying a green premium, right? Like, oh, organic food is more expensive than inorganic food or whatever it may be. And so we want to make sure that in our investments, rather than being contributors to inequity, that our investments are sort of contributors to equity, right? Because like if you just focus on effectiveness, for example, we all know that scientifically it's proven that the best thing you could do to change the trajectory of a kid's life is to do one-on-one tutoring, right? But then it's not as scalable, and then you're creating an incentive where only the people that can afford tutoring are getting that outcome, right? So accessibility for us is all about who are the target population that you're serving. And so the impact thesis behind each of our investments has some metrics in each of these dimensions, and we hold the company accountable for them. And so when we think of ourselves and just like, you know, how macroeconomic, like, so I'm an economics major, right? So in econ, macroeconomics is built for microeconomics, right? So then essentially for our fund investing philosophy, we took what we were doing at the company level, and we're hoping to sort of partner with fund managers. However, right, it's every manager is their own, and there's going to be a variety of different strategies and problems that they're going to try to be solving. And so rather than almost creating a framework for perfection, we kind of just created a framework to make sure that we're evaluating all the different facets of this conversation, right? And so we came up with a beautiful mnemonic. It was a little bit forced, right? It spells out impact. I think in practice it would actually be intentionality, thesis, alpha, process, considerations, and management and measurement, but that didn't sound as beautiful, and so we kind of just left it like this. But it's a scorecard that we use as we're getting to know a manager. Sometimes it's as quick as 3 months, sometimes it's as long as 2 years, where we sort of are looking at all the different dimensions of this. It's 6 dimensions, 22 items. So, and for each of those items, we give a score to a manager between 1 to 4. Where, to simplify things, it's 4 is like the highest level, industry leading, industry best, and 1 is either no attempt or lacking, right? And somewhere in the middle across all these different things. Let me run through them real quick. So intentionality is all about what are the main motivations and reasons that the managers are doing this. Management and measurement is exactly that, how you're managing the impact in your ownership period and how you're reporting it. Process is how impact management and measurement and ESG is sort of incorporated in your investment process, whether it be as you're getting to know management teams, informal DDQs, in your memos, how it sort of show up. Alpha is the belief that you're doing this because it makes you a better investor, not that it makes you a worse investor or that it's a trade-off, right? Like Impact Engine, we're a firm trying to prove to the world that you can have your cake and eat it too, and that our cake tastes sweeter. And so we're looking for managers who sort of believe that the work that they're doing in measuring and managing their impact, that's going to lead to outperformance. And so Alpha is all about that. Considerations is all about having the humility to know that the things that we're doing is complex and understand that even though you might be an education investor, that the human capital ecosystem has a lot of complications, and it's your ability to sort of consider both sides of something that may appear impactful on the surface, that it's actually impactful all the way throughout. And thesis is that formal articulation before every investment to make sure that it sort of aligns there. Lastly, I wanted to talk about one of our fund investments in our portfolio. So Impact Engine, in general, whenever we invest into a fund, we write checks between 2 million and 20 million, and we hold a portfolio of around 18 different managers, really scattered across venture, growth, and buyout, and the 3 thematic areas that I described. And I would say from a geographical standpoint, we're maybe 75% US, 15% developed markets outside the US, and then 10% emerging markets. So I want to talk about one of our fund investments called Quadra Capital. So Quadra Capital was founded by Dr. Amit Barma and Abrar Mir. Essentially, have spent all their lives trying to make healthcare better and more accessible throughout South and Southeast India. We are investors in their Fund 2 and their Fund 3, which is actually open currently. And essentially, they're healthcare investors in those geographies at the growth equity buyout stage. I would say they're actually more buyout investors, but in that region of the world, it's really rare to sort of see full exits in terms of control. But they're investing in really mature companies. Now, for Quadra, as we were getting to know them, it became apparent, right, that like how we think of healthcare here in the US is very different than how healthcare operates in these regions of the world in many different dimensions. And for example, here, when we look into a company, we actually call our healthcare vertical health equity. Because we sort of believe that although there's a lot of room to improve, right, like access to healthcare and the quality of healthcare and everything here in the States, we hope that sort of our investments have an additionality beyond just their inheritedness. But that same sort of lens and frame was not true sort of for Quadra. Here you're talking about a region of the world where people, 60% of the population is living on less than $3 a day, where annual checkups are non-existent, where private pay is everything, right? And so where you're thinking about maybe investing in basic healthcare infrastructure, that there's suddenly that much more additionality behind them, right? But at the same time, even though that may be true, we know that that's not going to be true for the long term, and we really wanted to push Quadra to sort of start considering not just the inherent impactful nature of their investments, but to sort of take it beyond and start really thinking if you're actually an impact investor, prove it to me. Why, if you could invest in this hospital versus this hospital, what's the impact argument of going with this specialty versus this specialty, et cetera, right? And so as we were getting to know them, we discovered these 4 things from our scorecard. One is that while they were very sophisticated, right, obviously because like the managers that we're going to partner with, they're some of the industry leading in terms of impact management and measurement. It was all being done internal. At part, there was also all the reports and all the things were sort of internal, and they really weren't having any accountability or any reporting from a third party, right? And so in the same way that a fund has an LPAC, we came up with the idea of having an impact advisory council made up by not only the biggest investors of the fund, but the ones that cared about the impact the most. And so this created a third-party group that created accountability for continuous improvement in this nature. We also realized that while Quadra is obviously, run by Abrar and Amit, who sort of both come from India, and even though they're considered, underrepresented managers here in the US, we couldn't really think of diversity, equity, and inclusion in the same way when looking at Quadra. Actually, what that revealed is that, while Quadra may not have a racial problem in their investment team, they did have a little bit of a gender problem in their investment team, right? And so we worked for them to sort of consider that and engrade that and actually have sort of been key in having them and supporting them in hiring a lot more female investment professionals. Then we also, we worked with them as we were sort of saying, like, hey, rather than thinking of just the broader macroeconomic opportunity, you're very much thesis driven. And you did this white paper on gastroeconomical hospitals or this research paper on dialysis centers. Let's in that sort of thematic work, let's start integrating an impact lens into it. And rather than just approving a theme, that's sort of like, that was such a powerful realization for them that from, as they were sort of thesis developing and then executing on those theses, that they were prioritizing impact from that strategy, right? And so we started creating what was a really strong ESG fund into a really strong impact fund. But yeah, I'll stop there. I have 5 minutes left for any questions. And if not, I'm happy to let you go.
When we look at funds, let's say they have intentionalities. So they say we're a healthcare fund. But where do you put the dial? Let's say they're a healthcare fund, but only 20 or 30% of the portfolio companies will be impactful and the rest will be cosmetics. Is that acceptable in your framework? Or on the measurability side, they say, well, we're a healthcare fund, in the underserved will be like having that impact, that scale, that depth of impact, but we can only measure 20% of it. Does that go into the scoring? You know, you mentioned the score of 1 to 4. Do you not accept the ones that are on the lower side of the score? Like how, with investment performance, it seems very straightforward. You have your target returns, you know, like you're getting that. But I feel like when it comes to impact, it's a little bit more subjective, and that's what creates the most conversation for us. And we sometimes, opinions vary so much.
So I love that question. I don't know if I have an answer for you, but I definitely have thoughts and examples. Right, so essentially the question is, you have this framework, but is there any sort of hard rules in place? And for example, take a look at a healthcare fund that maybe is 20, 30, 40% impactful. Is that enough? And does that have a role to play in your portfolio? And the short answer to all those questions is it depends. And that's kind of in purpose why this framework is meant to be imperfect and just as a way to ensure that we're at least asking all the questions and not too prescriptive in terms of like, oh, if you're not scoring above a 50, we're not considering you. I don't think the whole industry is sort of quite enough there yet. But to your question, on what sort of considers impact, I'll give you an example of a fund in my portfolio that I get a lot of questions about. They're called Bistria. Bistria is based in Chicago. They're a 13 billion AUM firm that has a flagship equity strategy, an affordable housing strategy, and a credit fund. And essentially the thesis of the firm is they're public policy experts, and they're using those insights to invest in the back of financial services, education, and healthcare. Now the problem with impact, is you sort of got to know Bistria maybe in Fund 2. They weren't calling themselves an impact fund. Nowadays, they call themselves as being an impact firm in a sea of impact funds, So they've really sort of stepped up. However, if you look at the portfolio or the strategy of that history and evolution of the firm, they haven't shifted at all. They're still investing in the same 3 sectors. They're still investing in the same types of companies, and they're still doing that, And so it's a little bit as to how you position yourself on everything. But on the other, for us, the best way to sort of where, I'm terrible at English idioms, but it's under where the buck stops is in the portfolio, And my best tool in an arsenal is sort of saying, if I took a company at random and they offered me a co-investment, would I take it? And does it sort of meet my own impact hurdles, And that's my best goal. And so I aim that in my portfolio of funds, I'm only partnering with funds that are 100% dedicated to this. Now, for example, Bistria, they're operating in the world of buyout. And I would argue that in between the 3 asset classes that I see, and particularly if you want to invest only to fully independent, fully dedicated impact firms and not call it the TPG Rise Fund or the Bain Double Impact or whatever it may be, and you want the whole firm to sort of consider impact as a cornerstone versus just a sleeve, there's really not that many options out there. And so then you're asking well, what do I do with that? And so in Bistria, here's a manager that is at least choosing 3 industries that have positive externalities and who as a buyout investor is really committed in, even if right now today the company is not operating as the most impactful company it can, they will make sure that it's not doing hard. And as buyout investors, they have a whole 100-day value creation plan to take the company from being here in this spectrum and moving it all the way here. Now, initially, it may be very structurally through like diversity in the workplace, fair representation in the board of directors, accessible products, unlocking new markets, and things like that. And they tell a pretty compelling story in each of those investments, how they've taken companies from here and moved them in the spectrum to here. Now, would it be easier if Bistria was sort of racing under an impact investing banner from the get-go and everything? Yeah, I would have 100% loved that, right? But it's, again, this is back to the imperfectionality of this exercise, it's really in the eye of the beholder, and the best thing you could do is just ask questions and get to know people and understand their motivations behind them. Awesome. I'll leave it at that. Thank you.